Hello. Today is Thursday, August 27th, 2026. Here is your daily signal. According to Fortune, the Iran conflict continues to stir up fears over the flow of oil through the Strait of Hormuz, as major escalation in the region looks likely in the coming weeks. The Strait of Hormuz stands as a vital choke point for global oil shipments, with roughly 20 million barrels per day passing through. Any major conflict here directly impacts global energy security. Historically, military tensions have flared with missile strikes and naval confrontations, and Iran has repeatedly threatened closure of the passage when sanctions or military actions intensify. In recent developments, Iranian naval forces carried out exercises near the strait on August 26, raising new security alarms. The U.S. Navy quickly responded by deploying additional vessels to the Persian Gulf after threats emerged regarding tanker disruptions. As a result, oil futures spiked on August 27 amid these renewed fears. The immediate fallout includes increased oil price volatility, higher shipping insurance costs, and rerouted tanker traffic. Over the medium term, disruptions could ripple through Asian and European supply chains, potentially driving up global inflation. Should the conflict persist, we might see a longer-term shift toward alternative energy and a rethinking of oil shipping routes. Further escalation could even drag coalition partners into wider military involvement, threatening regional stability. Next, we turn to economic tensions between the United States and China. As reported by Fortune and the Associated Press, President Trump is actively considering a new tariff of 7.5% on Chinese goods, aiming to penalize Beijing for flooding world markets with cheap exports, all while trying to keep his trade truce and summit plans with Xi Jinping intact. In the background, the U.S. imposed sweeping tariffs back in 2018 to address trade imbalances and intellectual property concerns. The proposed 7.5% tariff would add to those already in place, showing a renewed U.S. push to influence one of the world's largest trading relationships, which reached over $690 billion in goods last year. These recurring trade skirmishes initiated under the Phase 1 deal in 2020 have already caused supply chain disruptions and a strategic rethink among global manufacturers. On August 26, U.S. trade officials held meetings with industry groups to discuss how the new tariff might impact costs. Apple, for instance, warned that further tariffs could drive up supply chain expenses across the board. Meanwhile, Bloomberg reports China could retaliate with countermeasures, particularly targeting U.S. agricultural exports. Near term, Americans may face higher prices for imported goods due to these levies, while U.S. imports from China could sharply decline. The risk is that tit-for-tat tariffs escalate, hitting sectors from agriculture to technology. Over the medium term, U.S. companies are likely to accelerate efforts to move supply chains away from China, redirecting global trade flows perhaps toward manufacturing hubs in Southeast Asia. Now, let's move to a remarkable development in space technology. Next Big Future reports that recent tests of the IVO quantum drive are raising new questions in the propulsion world, following the device's latest results in orbit. The IVO quantum drive aims to produce thrust without traditional propellant, relying instead on quantum mechanisms, a potentially disruptive leap for satellite and deep space missions. The project, led by IVO Limited, made its debut in lab settings in 2022 and has since drawn widespread interest from both industry and academia. On August 26, Space News revealed IVO's drive produced a measured thrust of 0.123 millinewtons without propellant. However, a further analysis by Caltech physicist Dr. Lisa Thompson, as reviewed in TechCrunch, highlighted certain data anomalies, suggesting the need for more independent validation. Industry experts, including Rocket Lab, have expressed skepticism about the drive's scalability and readiness for commercial use, according to a recent Ars Technica article. In the short term, this may attract new research funding and prompt more independent studies to replicate the perceived effects. If the findings hold, satellite design could be simplified, reducing launch costs and extending spacecraft life. In the medium term, widespread adoption would likely force new government guidelines for quantum propulsion and orbital debris management and might even shift industry standards globally. Now, onto the markets. In international markets, Germany saw mixed performance, with EWG slipping 0.29% day over day but rising more than 5.7% for the month, while France showed a minimal day decline of 0.13% and maintains monthly gains. The UK dropped 1.07% on EWU, even as Italy, tracked by EWI, showed a slight daily dip of 0.11% but is up over 4% for the month. Spain, Netherlands, and Belgium revealed similar patterns of modest day declines or gains against meaningful monthly advances, while China large cap and Hong Kong both posted slight daily losses despite mostly flat results over the month. India fell nearly 1% on the day, and Japan rose over 6% month-on-month, despite daily fluctuations. In commodities, gold and silver retreated sharply by about 1.6% and 1.17% day-over-day, but both posted double-digit monthly increases, with platinum following a similar trend. Oil, measured by USO, climbed 0.95% day-over-day and is up 5.7% for the month, while corn and wheat posted the largest daily surges among commodities, at 2.2% and 5.3% respectively. In the favorites, Microsoft jumped 0.95% day-over-day and surged over 26% month-on-month, while Nvidia retreated 1.59% on the day but remains up 6.4% for the month. AMD rose modestly, ARM jumped 3.9% on the session, and Oracle gained the most among tech majors, up 2.8% day-over-day. In sector performance, the S&P 500 edged up 0.02% to log 3.4% monthly gains, while the semiconductor sector and SOX advanced 0.26% with nearly 5% gains for the month. Healthcare and finance slipped slightly while real estate lagged with a 0.59% day loss and negative momentum this month. That's it for today. You can find more news and details on our website. Goodbye.